Question 10a looked at a little bit of theory to do with conservatism, and mainly though it was concerned with inventory valuation from Unit 4. So what we were given was 3 models of stock, the Queen, the Prince and the Whiz, and we were given a bunch of info. We were told that the quantity as per stock take was as follows. That differed for one of the units in terms of how much was on the stock card, the cost price per unit, the estimated selling range, the delivery in, and the delivery out for each item of stock. We're also given some additional info. All costs shown are on a per unit basis and don't include GST. Cost price is the supplier's invoice price before delivery charges. So we're talking about this number here. That's just simply how much we were charged by the supplier. Delivery out is actually paid for by the customer. So this won't be an expense for us. That's actually going to be incurred by the customer. The Whiz model has been superseded and therefore the selling price is going to be reduced. And every one of these, they're actually coffee machines. Every one of these coffee machines is going to come with a packet of coffee pods as kind of a sales promotion. So that'll cost $10 plus GST for every coffee machine sold. What we're asked to do for A is calculate the value at which stock should be reported in the balance sheet. So the first thing we need to remember is stock is listed at its cost, and cost is simply its product cost. So what we do is we call all expenses incurred in acquiring stock and getting it ready for sale are called cost of goods sold. The ones we can allocate will be called product costs. The ones we can't allocate will be period costs. There's also going to be expenses incurred in getting stock from the store to the customer and running the store on a daily basis. We call those other expenses such as cartage out, carry bags, rent, insurance, and so on. So what we want to do with each of these costs is figure out which ones are the product costs, because that will be our cost. So first of all, we're told that to buy them, we have to pay a cost price. So that will go in, and it also says that's the cost price before delivery charges. So that will go in as a product cost. So what we'll do is we'll put in all the ones we need for the cost in this tub here. Next, we're told about the selling price. Well, the selling price isn't a cost, so I don't need that just yet. Delivery in, so that is what the supplier charges me. Is that required to get it in a condition and location ready for sale? It is. Can it be broken down to each or allocated to each individual unit? It can. So I'm going to put that in as a product cost. Delivery out, is that an expense? And if so, is it a product, period, or other? It's none of those because it's actually going to be paid for by the customer. The last one we need to worry about is the packet of coffee pods. I'm going to give these away as a sales promotion. They're going to cost me $10 each. So what I'm going to say is that because these are required after I've sold them as a promotion, they're actually going to be another expense. They won't be a product cost or a period cost. They'll be another expense. So what I can do now is figure out the product cost, which is the cost price plus the delivery in for each of these models. So for the Queen, it's $450. The Prince will be $190 and the Whiz will be $100. So now I have the cost of each unit. However, I can't answer the question. I can't calculate the value of each of total stock, and that's because inventory should be valued at the lower of its cost, or if there's a net realizable value, we're going to use that if it's lower than the cost. So what do we mean by cost? We mean the number we just figured out, the product cost. What was net realizable value? Well, that was simply the estimated selling price less any selling, marketing, or distribution costs. So what we've figured out already is the product cost. So let's now go and figure out the net realizable value, and we'll define that as the estimated selling price less any selling or marketing costs. So first of all, we've got the selling price range, but we've got a lower end and a high end. Which one are we going to use? Well, we usually are conservative. We apply conservatism. So I'm going to pick the lower number in each case. So there's my selling prices. However, is this delivery out a selling cost? So to get these to the customer, I deliver them. I'm actually not going to call that a selling cost. Why? Because it's actually going to be paid for by the customer. So it's not a cost for me. However, we do have the coffee pods here. Every coffee machine comes with a free packet of coffee pods. So I'm going to take that out and say, let's take that out as a selling and distribution cost for each unit. So the net realizable value of the Queen will be $540, the Prince will be $240, and the Whiz will be $60. So what I need to do now is figure out for each of the items which one's lower, the product cost or the net realizable value. So the Queen, I had a product cost of $450, a net realizable value of $540, so I'm going to value that at the product cost. The Prince was a cost of $190 and NRV of $240, so I'm going to keep that at its product cost. And the Whiz, that had a cost of $100, but the net realizable value was lower, so I'm actually going to value that one at its net realizable value. What I need to do now is figure out, well, how many units do I value each one at? Is it the quantity on the stock take or the quantity on the stock card? Well, what I'm going to do is actually value it at the stock take. That's because that's how many I've actually got. The stock card is just how many I should have. So what I'll do is for the Queen, for example, I'll take 45 units at $450, which is $20,250. For the Prince, I'll take 30. So what I'll do is I'll use this number here, not this number here. And I'll value each one of those at $190 for a total of $5,700. And for the Whiz, I've got 60 units at the NRV of 60, which is a total of $3,600. And if I add that up, the answer I need for this question is $29,550 of total stock. Looking at how the state went, 35% of the state got 0, 39% got 1, so basically 1 in 5 students could only get 2 or more. And at the top end, only 5% of the state got this question correct. So specifically, the examiner pointed out that a lot of students had trouble dealing with a few different topics combined together. First of all, product costing, a stock loss, and a stock write-down. And the examiner's put in a little bit of a tip here. Remember to practice questions featuring all 3 of these areas at once, rather than just separate questions dealing with one of these issues at a time.